What's up, guys? We are live. Thank you for tuning in. I really appreciate it. This is James Cash. I'm with your Realty Group and Real Estate Brokers of Alaska. I'm coming at you with a weekly residential market report update. We're going to be talking about real estate today. Stop, Kevin. Hi, let's talk about some real estate. Because if you got time to sip on the Baileys, you got time to know about the real estate market. I think that was British. I.e., because if you got time to sip on the Baileys, you got time to know about the market. British. Let's go. Let's go. Let's go. It is St. Patrick's Day today, so if you're out there having fun, just be safe. Don't do anything too crazy. Don't do anything I would do. Don't do things. Don't do bad things. Just don't do things. Do things, but not bad things. Happy St. Patrick's Day. Let's go. All right, awesome. Thank you for tuning in. Again, I appreciate it. My team appreciates it. We love you. Thank you. We're talking in arrears. So we're going from March 3rd through March 9th. We're comparing it to year over year. I have a new format this week. Been getting some feedback from you guys, so thank you very much. If you have feedback on what you want to see, just let me know. I want to make these videos more coherent. I want to get to the good stuff so you don't have to sit through me rambling about real estate, because I could do that all day long, baby. All day long. All day long. But March 3rd through March 9th, so let's get into it. So what I'm gonna do is I'm basically going to throw up my stats on the screen. I'm going to jump to my conclusions. If you wanna stick with me, great. If not, you're gonna know what this week is doing in Anchorage in the residential sector. So stats are coming up, get them on the screen. You got 10 seconds. If you wanna freeze frame it, go, and I'll ramble off during these stats. All right, so here's the breakdown. Week to week, we're doing better than last week. That's to be expected. Like I said yesterday, Friday, March 16th, saw a huge influx of listings compared to last Friday, so that's just a positive trend. We're going in the right direction. It's springtime, the snow's melting, it's St. Patrick's Day, so people are just getting in the mood. So I really want to talk about two things this week. The take homes, they are this. One, interest rates are rising. We'll talk about that. If you want to buy, do it now, please. Two, if you are selling, it could be a tough market with the interest rates rising, and your home's got to be awesome, okay? We'll get into that later. So if you're looking to buy now. Contact your lender, get locked into your rates. Don't let those rates tick up on you. You want to get the most bang for your buck. And if you're investing, you obviously want to have the lower interest rate so you're leveraging your money appropriately for a long-term investment. And if you're selling your house, you got to stand out on the market. Buyers are going to be picky. So we're going to get into those two things. If you want to turn the video off, we're doing good. Week to week, we're doing good. Year over year, we're doing great. If you're buying, buy now. If you're selling, make sure it's a nice house, okay? Make sure it's clean, well kept, updated. Don't let me get into it. Don't sell a pile of junk. And get in the market now. So first things first, I want to talk about what the interest rate is doing. I am no expert when it comes to interest rates because experts wear glasses. All right, so now I'm an expert. Let's talk about what the interest rates are doing, why they're doing it, what's causing this in the direction we're gonna go, and what to expect for you buyers out there. Interest rates are rising, it's a real thing. So we're sitting about 4.54% for the average interest rate on a 30-year fixed loan. I'm going off Mortgage News Daily and Freddie Mac, 4.53, 4.44 respectively. So if you are getting a 30-year fixed home loan, expect about 4.5% right now. Those could go up next week. I did see the bond market moved by about 1 basis point yesterday, I believe. So expect those to go up. Why are interest rates rising? Here's the thing about interest rates. When our economy is doing well as a whole, those interest rates rise. When investor confidence is high, people want to invest in the economy, they're making moves, capital projects are flourishing, which they are throughout the rest of the states. That increases investor confidence. I got notes, lots of notes. All right, so I'm gonna read some notes I had, so bear with me. All right, so we're talking about the 10-year Treasury bond. There's also a 30-year, but most of the time we go off the 10-year Treasury bond because people refinance inside of 10 years. So the 10 years is what we base it off of. So it's a Treasury bond issued by the government, and basically it's they sell it to investors. So This bond, which is sold at auction by the US government, also tends to signal investor confidence. When confidence is high, the 10-year Treasury bond's price drops and yields go higher because investors feel they can find higher returning investments and do not feel they need to play it safe, right? So it's like when you're in Vegas and the table is hot, everyone's feeling it, so you bet big, right? So that's what's going on. The market's doing well, everyone's winning, so investor confidence goes up. The 10-year Treasury bond, the price and the yield have an inverse correlation. So when investor confidence is high, the yield goes up, which drives the price of the interest rate up as well. So that's what's happening. The rest of the contiguous 48 states, they're killing it right now. So those are causing those interest rates to rise, right? Because people bet big, they bet harder, and they don't feel the need to make super thin margins because they have so much confidence. As the rest of the states do well and the stock exchange does well, we're going to expect those rates to go higher. Now, if there's a correction in the market, that could be a bad thing because it's going to take some time for the market correction. You know, let's say the yield goes down. Let's say the stock market goes down, right? It's at an all-time high again. So we're overdue. It's ebbs and flows, guys. Ebbs and flows. The market does this thing. It doesn't do this thing, okay? Hopefully it doesn't do this thing, but the market always does this thing. It's economics 101. Peaks and valleys, peaks and valleys, peaks and valleys, booms and busts, okay? That's what it does. So expect it and plan for it. Educate yourselves. Here's my thought process on it. I like it. I like a higher interest rate. I think, you know, when we were sitting at 3%, that was way too low. People were buying a lot of house for their money, and that part of it is cool. But the housing market should be the backbone of the U.S. economy, and there should be some profits in that. 3% is too low. I think 7-8% is too high. I think that 5 to 6% is, I think it's a good middle ground. I think that's where our market should always be. It's fair for investors. It's fair for consumers. It's a good thing in the long run. Rates can't always be historically low, right? And, you know, another thing I'm going to say is there's no right time if you want to buy and it makes sense for you to invest or buy a single family home. The time is right for you. Don't worry about timing the market. You can't do that. No one has a crystal ball. Everyone who I've ever met that has timed the market got lucky. They had no idea what they were doing and they were in the right place at the right time. If you time the market, that is stupid. It doesn't work, okay? We just had Neil Fried at our brokerage. He's one of the smartest economics guys in the state. Even he plays a guessing game, and he will tell you that personally. So if you're timing the market, good luck, but that's stupid. So bottom line is, if you are looking to buy again, I would do it now. I'm seeing interest rates tick up week after week, day after day. So at least get to your lender, have a conversation with them, even if you don't get pre-qualified, and shop around for your rates. Go see 3-4 lenders. I don't care. Do what's best for you. Make sure you are getting the best rates and people are being, your lenders are getting competitive for you. You're going to get the best deal. Next, on the sell side. So as a seller, what you have to concern yourself with right now in this market is that buyers want affordability, right? Oh my gosh, affordability. I need more money to buy my Lucky Charms. Ah, that's some good whiskey. Ooh, it's got a little bite to it. So if you're looking to sell, here's my advice to you. You want to stand out in this market, and there's that saying, the home sells itself, but the home has to sell itself. Let me elaborate. So when a buyer walks into a home, if they see it's not clean, it's not tidy, it smells weird, it needs new carpet, you're not selling them on the house, right? Those are all objections, reasons for them to say no, it needs new carpet. It would be if this, right? Don't do that. You're not gonna sell a house that way in this market. You're gonna sell a house in this market for top dollar if they walk into the home and they have no objections, right? The house will sell itself if the house can sell itself. So it's your job as a seller to make sure you are taking care of perhaps your biggest financial investment, your biggest financial sale of your life. Spend the extra $2 or $3 grand to fix the carpet. If you need new cabinets or countertops, spend the money. Because what's going to happen is you will sit on the market for a long time and you're going to take a hit on price, or you're going to jump at the first offer when you've been out there 180 days, okay? So take care of your home, take care of your investment, spend a little bit of extra time and money on making sure your home sells well. I do have a 2018 home sellers packet out there I give to my potential sellers. I just do tips and tricks, things I personally recommend to get top dollar. So things I personally recommend to get top dollar for your home in this market. Okay, so if you want that, link's going to be down below. Just send us an email and we'll email that over to you. All right, guys, so that's it. I was trying to be short and sweet this week. Again, thank you very much for tuning in. I appreciate it. My team appreciates it. I love real estate. I hope you do too. Thanks for watching. If you're not following us on Facebook, check it out. We do tons of updates, fun stuff, funny stuff. The videos are on there. But facebook.com/Hero Realty Group. If you're not following us on Instagram, please do so right now. Please. We have the best Instagram account as it pertains to real estate in Anchorage, so follow us at Hero Realty Group. If you're not following me on Twitter, I give out some real estate advice at James F. Cash. Thanks. I appreciate it. Have a good St. Patrick's Day and be safe. Don't do anything stupid.